stop whatever you're doing. I don't care if you're eating breakfast, zoned out on your phone on the subway like a zombie, or watching this in the bathroom at work while your boss thinks you've got food poisoning. I need you to pay attention because what I'm about to tell you will determine whether you make money this week or lose it. It's Tuesday, January 27th, 2026. Look at your screen. Silver just broke through $111 an ounce. Gold is sitting at $5,070. And Bitcoin, the so-called digital gold, the financial revolution, the future of money, is tanking below $88,000 with 4 consecutive months of losses. Something we haven't seen since 2018. 3 assets, 2 exploding upward, 1 plunging into the abyss. Coincidence? There's no such thing as coincidence in markets. When you see divergences this brutal, the market is screaming something at you. And what it's screaming is crystal clear. Smart money is getting out of paper and piling into physical metal at a pace we haven't seen in decades. But of course, they won't tell you this on the evening news. On the evening news, they talk about the weather and sports. Welcome to reality. But that's not what's got me worried. What's got me worried is this. We are exactly 3 days away from a U.S. government shutdown. 3 days. Friday at midnight, the lights go out if the Senate doesn't sign. And Polymarket, which oddly enough tends to be more accurate than Goldman Sachs analysts with their Harvard MBAs, is showing a 77% probability it happens. This isn't some distant risk. It's practically a certainty. And you know what connection no mainstream outlet is making? You know why silver exploded this week and not last week? Because a shooting in Minneapolis just paralyzed Washington and is about to leave the Federal Reserve flying blind. I'm Carter. I've been telling you for years that the system was going to crack. And every time I said it, someone in the comments would write, "You're a paranoid boomer," or "Stop fear-mongering." Well, here we are. Silver at 111 and the government about to shut down. Today, I'm going to connect the dots that nobody else is connecting. And if you don't understand what's happening after this, it's because you don't want to understand. Let's start from the beginning. Let's talk about the bullet that paralyzed Washington. Saturday morning, a 37-year-old man named Alex Pretti was walking home after a 12-hour shift. Alex was a nurse in the intensive care unit at the Minneapolis Veterans Hospital. 12 hours intubating patients, cleaning wounds, saving the lives of guys who served their country. And as he was walking home, probably thinking about crawling into bed and sleeping for 10 hours straight, he crossed paths with a patrol of Federal Border Patrol agents. What happened next is in videos circulating uncensored across every social platform. Alex Pretti was shot multiple times. He died in the street, an American citizen, a nurse, a guy who dedicated his life to caring for veterans, shot dead by agents of his own government. And here's the detail that turns this into a political nuclear bomb. It's not an isolated case. Exactly 20 days ago, on January 7th, another person died in Minneapolis at the hands of ICE agents. Her name was Renee Good, 37 years old, a poet, mother of 3. The mayor of Minneapolis wrote in the New York Times that after watching videos from multiple angles, it seems clear to him that Renee was trying to get away, not attack anyone. 2 dead in 3 weeks. 2 American citizens in the same city at the hands of the same type of federal agents. If this happened in Venezuela, CNN would be calling for humanitarian intervention. But since it's happening in Minnesota, silence. Why am I telling you this on a finance channel? Has Carter lost his mind and started doing politics? No. I'm telling you because this blood on the streets of Minneapolis just blew up the budget process of the largest economy on the planet. Chuck Schumer, the Democratic leader in the Senate, came out Saturday with a statement that basically says, "The goodwill is over." Direct quote. Democrats will not provide the votes to advance the appropriations package if it includes funding for the Department of Homeland Security. Senator Amy Klobuchar from Minnesota went on Meet the Press Sunday and said, "No, I'm not going to vote for this funding. Our Republican colleagues need to step up and stop this." And Patty Murray, the ranking Democrat on the Appropriations Committee, dropped a line that should chill your blood. Federal agents cannot murder people in broad daylight and face no consequences. This isn't normal politics. This isn't the usual theater of Democrats and Republicans pretending to fight while having dinner together in Washington. This is real war, and the collateral damage is going to be your portfolio if you don't understand the chain of dominoes coming. Let me explain the political trap Congress is stuck in. It's a perfect trap, a mathematical deadlock designed by the devil himself. The funding package the Senate needs to pass is worth $1.2 trillion. It includes 6 bills that fund defense, health, education, transportation, housing, and the Department of Homeland Security, the famous DHS that oversees ICE and Border Patrol. The problem is that to pass anything in the Senate, you need 60 votes. Republicans have 53. They're 7 short. They need 7 Democrats to cross the aisle and vote yes. Let's do the math together. How many Democrats are going to vote yes on a package that includes $64 billion for the department whose agents just killed a nurse in the street? After seeing the viral videos, after the protests, with AOC publicly calling for ICE funding to be blocked, how many? 0. None. Because any Democrat who votes yes has their political career dead on arrival. The 2028 primaries will destroy them. Imagine the campaign ad. Senator so-and-so voted to fund the agents who killed Alex Pretti. Nobody survives that. But Republicans can't back down either. If they separate DHS from the rest of the package, the Trump base crucifies them. Trump has tweeted defending ICE operations. Any Republican who votes to weaken the border is toast in their primaries. Result, nobody can move. The system is locked. 77% probability of shutdown, according to Polymarket. And look, Polymarket called the elections right when every TV analyst was saying the opposite. I trust people betting their own money more than pundits getting paid to talk. Angus King, the independent senator from Maine, who was key to negotiating the end of the last shutdown, has said this time he's voting no. When even the moderates who hate shutdowns say no. When even the people whose job is to find compromise say, not this time, you know things are serious. 3 days. And here's the part that no traditional media outlet is explaining because, frankly, they don't want you to understand it. What really happens when the U.S. government shuts down? The narrative they sell you is that national parks close, some federal workers go home without pay, it's a bit inconvenient, and then everything goes back to normal. Oh no, the Washington Zoo closed for a weekend. How dramatic. That's what they want you to think. The reality is way more screwed up. When the government shuts down, the agencies that produce economic data shut down, the Bureau of Labor Statistics sends its workers home. They're the ones who measure inflation with the CPI. They're the ones who count jobs with the payroll report. The Bureau of Economic Analysis shuts down too. They're the ones who calculate GDP. Without BLS and BEA, there's no data. And you know which institution depends absolutely on that data to decide whether to raise rates, lower them, print money, or destroy it? The Federal Reserve. The Fed meets today and tomorrow. Today, Tuesday, the FOMC meeting starts. Tomorrow, Wednesday, at 2 p.m. Eastern, Jerome Powell comes out for his press conference. The market expects them to hold rates at 3.5 to 3.75, 94% probability. That's already priced in. What's not priced in is what comes next. If the shutdown hits Friday and drags on, the next Fed meeting in March is going to happen in a total information vacuum. Powell won't know if inflation is going up or down. He won't know if employment is tanking. He'll have to decide the monetary policy of the world's largest economy by staring at the ceiling and flipping a coin. It's like flying a plane through a hurricane with all your instruments turned off. What do? Climb? Descend? Hold course? You have no idea because you can't see anything. And you know what a central bank does when it's flying blind? Its most primal instinct: print, inject liquidity, open the floodgates just in case. Because a central banker would rather make a mistake by printing too much than let the system freeze without seeing it coming. They can manage inflation later. A real-time liquidity crisis costs them their job and their legacy. They'll always choose the printer. And this is where those of us who've been at this for years are rubbing our hands while the people who called us crazy start sweating. The market knows what's coming. The hedge funds know. The sovereign wealth funds know. That's why silver is at $111. This isn't speculation from 4 weirdos on Reddit. It's anticipation from institutional money moving billions. Singapore funds are buying physical silver. Hong Kong family offices are buying gold. Dubai traders are paying premiums they would have considered obscene a year ago. Why? Because they're buying insurance before the house catches fire. They're getting out of the dollar before the Fed dilutes it while navigating a political crisis blind. While you sleep, someone in Asia is buying the metal you could have bought yourself. Every day without an agreement, every hour closer to shutdown is gasoline poured directly on metals. And if you think this is already priced in, if you think 111 is too expensive, wait until I tell you what's happening in China. Because the shutdown isn't the only crisis. There's a structural factor amplifying everything that turns this moment into something we haven't seen in decades. On January 1st, 2026, less than a month ago, China's Ministry of Commerce implemented new export controls on silver. Same playbook they used with rare earths. Same playbook they used with gallium and germanium. They've gone from a quota system to a licensing system. Now, to get silver out of China, you need a special government permit. Only 44 companies have been approved to export in 2026 and 2027. 44 companies for an entire country that processes 70% of the world's silver. Elon Musk tweeted about this over the weekend. He said, "This is not good. Silver is needed in many industrial processes." When even Musk, who's usually busy sending rockets to Mars and trolling on Twitter, stops to comment on silver export restrictions, you know it's a big deal. The Securities Times, a Chinese state media outlet, published that this measure officially elevates silver from ordinary commodity to strategic material. Same treatment as rare earths. China has decided that silver stays home for its solar panels, its batteries, its semiconductors. The tap to the West has been shut off, and the West has no plan B. Want the mathematical proof that there's a real shortage? Look at the spread between Shanghai and New York. On the Shanghai Gold Exchange, physical silver is trading at $124 an ounce. On the New York COMEX, it's trading at $111, $13 difference per ounce. Let's do the math. If you buy a contract for 5,000 ounces in New York and sell it in Shanghai, that's $65,000 in theoretical profit per trade. Minus shipping costs of maybe $1 or $2 per ounce. Still an absurd bargain. In a normally functioning market, that spread closes in milliseconds. Arbitrage is basic capitalism. Buy cheap here, sell expensive there, pocket the difference, repeat until prices converge. But the spread isn't closing. Why? Because there isn't enough physical metal to move. Arbitrage requires you to be able to pull metal out of COMEX and ship it to Asia. And when you try to do that, you discover the uncomfortable truth. The warehouses are emptying out. In the last 7 days, 33 million ounces of silver have left COMEX-registered warehouses. 33 million divided by 7 days is almost 5 million ounces disappearing daily. That's 26% of available inventory. A quarter of the metal vanished in a week. And there are reports that a significant portion of what's left is already committed, not actually available for immediate delivery. COMEX is being stripped to the bone, while banks keep selling paper contracts like they have infinite metal. Remember when they called us conspiracy theorists for saying COMEX was a paper casino? Remember when they said there would always be enough metal? Well, here's reality. The paper price in New York and the physical price in Shanghai are getting divorced. And when paper and physical get divorced, paper always loses. Ask anyone who held Lehman Brothers stock in 2008 how their little pieces of paper worked out. London is just as bad or worse. The London market is in backwardation. Translation for normal people. The spot price for delivery right now is above the futures price for delivery in 3 months. In a normal market, it's the other way around. Futures cost more because they include storage. When spot is above, the market is screaming, "I need metal now, and I'll pay whatever it takes." Silver lending rates in London are at 7 or 8%. Nobody wants to lend their metal because they know getting it back is going to be harder and harder. But there's one piece of data that keeps me up at night, more than the spread, more than the inventories. It's the velocity. The price is impressive, yes. 111 is historic, but what has me wide awake at 3 in the morning is the acceleration of the move. You don't see this if you just look at the number. You see it if you look at the time. When silver moved from $20 to $30, it took 145 days, almost 5 months of trench warfare. Banks sold every rally. JP Morgan, Bank of America, the usual suspects, shorting every resistance level with paper contracts. It cost blood to advance $10. From 40 to 50, 39 days. Resistance was weakening. From 70 to 80, 6 days. From 90 to 100, the most important psychological number, the barrier everyone was watching, 10 days. See the pattern? 145, 39, 6, 10. Exponential decay of resistance. Sellers have evaporated. The algorithms that for years automatically sold at every technical level have been steamrolled by a tsunami of physical buying. There's nobody left on the other side. The shorts are trapped. The banks that manipulated this market for decades are watching their position become more toxic with every dollar it rises. And the best part is they can't get out without pushing the price even higher. We're in a vertical phase. It's like a rocket leaving the atmosphere. The higher it goes, the less air there is, the less resistance it finds, the faster it accelerates. If this velocity holds, and with the shutdown and a blind Fed, there's no reason it shouldn't, we could see 120 next week. This isn't crystal ball prediction. It's reading the speed of the tape. And while metal explodes, I want you to look at what the digital gold is doing. Bitcoin at 87,000 and falling. 4 consecutive months of losses. Red October, red November, red December. January on track to be the 4th. You know when the last time this happened was? 2018, when Bitcoin had 6 red months in a row after the 20,000 bubble. Not even the FTX collapse in 2022 produced more than 3 consecutive negative months. $1 billion in liquidations last week. ETFs with capital outflows. The options market on Deribit with max pain at 90,000. And meanwhile, gold and silver breaking records every day. Bitcoin maxis have been telling us for years that when confidence in the system collapsed, their magic internet money would be the safe haven. Well, confidence is collapsing. The government can't even keep itself open. And Bitcoin is sinking while the gold it was supposedly going to replace sits at 5,070. Why? Because when confidence in the system truly collapses, when people doubt not just the banks but the infrastructure itself, the market goes back to basics, to what you can touch, to what doesn't need electricity to exist, to what has 5,000 years of history, not 15. You can't build a solar panel with Bitcoin. You can't make a battery with Bitcoin. You can't put it in a nuclear reactor or a missile. Silver can. It's the most electrically conductive metal that exists. In an existential crisis, the market wants real things. Atoms over bits. Metal over promises. They've called us boomers, bears, broken crystal balls, financial dinosaurs. And now those same people who laughed are watching their crypto portfolios melt while the shiny rock for grandpas hits new all-time highs every week. There's something poetic about that. Now, let me tell you what's going to happen over the next 3 days. Because if you've stuck around this long, you deserve to know how to prepare. Tonight, when markets open in Asia, you're going to see movement. Orders have been piling up over the weekend. Traders in Singapore and Hong Kong have been reading about Minneapolis, about the shutdown, running their calculations. The price isn't going to open exactly where it closed Friday. We'll probably see a gap, maybe volatility in both directions as they digest the information, but the underlying direction is obvious to anyone who can add 2 plus 2. Tomorrow, Wednesday, is the key day for the Fed. At 2 p.m. Eastern, Powell announces the decision and holds his press conference. Everyone expects them to hold rates. That's priced in. What matters is what he says about the shutdown, about the possibility of flying without data, about whether they've got the printer ready just in case. If Powell gives any signal that they're prepared to inject liquidity preemptively, any hint that the money helicopter has its engines running, metals are going to take off. Thursday is the second to last day. If there's no deal, panic accelerates. Risk managers start hedging positions. Those who aren't in metals yet will try to get in. And Friday at midnight, without a signature, the lights go out. An important warning, there will be volatility. There will be manipulation attempts. The banks that are short silver, the same ones who've been manipulating this market for decades, will try one last hit to shake out the weak hands. It's their usual playbook. They wait for a moment of maximum attention, dump a ton of paper contracts to crash the price, trigger stop losses from leveraged traders, and scoop up the pieces cheaper. They've done it 1,000 times, they'll try it again. If tomorrow or the day after you see a sharp drop of $5 or $10, don't panic. Don't sell. That's exactly what they want. They want your metal cheap to cover their shorts before the shutdown blows up in their face. Every dip in this environment is a gift. It's the last chance to get on the train. Those who sold during the crashes earlier in this rally are kicking themselves. Don't be one of them. Look, Carter's been doing this for many years. I've seen bull markets and bear markets. I've seen blatant manipulation and epic squeezes. I've seen people turn $1,000 into $1 million, and people lose their house for not knowing when to stop. And I'll tell you one thing, with the honesty of someone who isn't selling you anything, what we're seeing is not a normal speculative rally. This isn't GameStop, where a Reddit crowd trolls some hedge funds for 2 weeks and then everything goes back to normal. This is a structural migration of capital. It's the market collectively saying, I don't trust paper, I don't trust promises, I don't trust politicians who can't keep the government open or central bankers who are going to fly blind. Give me something real. Give me something I can touch. Give me something that's worked as money for 5,000 years. The convergence in front of us is unique in our lifetime. A political crisis that's going to blind the Fed. A supply crisis because China has shut off the tap. A trust crisis because people are watching their government shoot citizens in the street. And all of this while COMEX inventories drain and the Shanghai spread screams shortage. I don't know when we'll see something like this again. Probably never. I'm not a financial advisor. I'm not telling you what to do with your money. What I do is tell you what I see, what the data says, and what I'm doing with my own portfolio. I have physical, metal. I've been accumulating for years while people called me a paranoid boomer. I'm not selling a single ounce. When I see a shutdown in 3 days, a Fed about to fly blind, China strangling supply, and 33 million ounces leaving COMEX in a week, I don't see a top. I see the beginning of something much bigger. What's the target? You always ask me that. Carter, where's silver going? And I always answer the same thing. I don't know. Nobody knows. People who give you exact numbers are either lying to sound smart or selling something. What I do know is this. Velocity is accelerating, not slowing. Resistance is evaporating, not increasing. Supply is running out, not being replenished. And demand is growing, not falling. Citi published recently that they saw $100 for March and $110 for the second half. We're already at $111 and it's January. They were behind before they even started. Goldman has gold as their highest conviction trade for 2026. The same banks that called us crazy for years for accumulating metal are now buying at prices they would have called a bubble 6 months ago. Ironic, isn't it? But that's how Wall Street works. They tell you not to buy while they accumulate. Then, once they've built their position, they change the narrative. 3 days. That's what's left until the government shuts down or until a miracle happens and they reach a deal. Looking at the state of American politics, at the blood in Minneapolis, at the absolute polarization, I wouldn't bet on the miracle. But even if they pull it off, the structural factors are still there. China isn't reopening the tap. Inventories don't magically refill. Industrial demand for silver in the energy transition doesn't disappear because some politicians sign a piece of paper. The shutdown is the immediate catalyst. The underlying trend is much bigger. We're in the middle of a historic repricing after decades of suppression. The paper price and the physical price are separating. When that happens, prices do things that seem impossible until they happen. This isn't a correction. This is a reset. A transfer of wealth from paper to metal. From those who blindly trust the system to those who've been preparing for years for when it fails. Resets don't send warning letters. They arrive. And those who are positioned survive. Those who wait until everything is obvious and comfortable pay the price of arriving late. 3 days until shutdown. The Fed starts today. Powell speaks tomorrow. China has the tap closed. COMEX is draining while banks pray. Bitcoin sinks while silver breaks 111. The market has chosen. Atoms over bits. Metal over paper. Reality over promises. The question isn't whether this continues. The question is whether you'll be positioned when it does. This is Carter. See you in the next one. And if you're not subscribed, you know what to do. Take care out there.